All right, guys, this is insane right here. This just happened. I posted a video and everybody was commenting Apple, Apple, Apple. I was like, what do you? I thought you guys were tripping. I'm honestly blown away right here. This just occurred not too long ago. This is crazy to start 2019 like this, but I have to talk about this. This is, a lot of the videos, even with stock market crash, this and that, with the stuff I've been saying, this is very, very important. So make sure I'll link it again. There's the video I made in August talking about this and relating it to 2001, but this is probably one of the worst indicators. When you saw, we're gonna go over it here because I'm literally blown away. I went to the NASDAQ. I was like, this is bullshit. I wanted to see if they did a filing, and they did a filing of it. What happened? Apple just came out and they cut their guidance. Pretty much this means after their last quarter, they said we expect to sell this many phones, make this much money, yada, yada, yada. Pretty much they were saying we were going to make $91 billion in revenue first quarter. And they just came out today and cut it and said we're going to make about 84 billion. So I'm going to go over, but that dropped the stock dramatically. It's been a long time since any big company like this has done that, and this was the first indicator in 2001 when I was comparing this to the 2001 crash. That is usually your sign when you're in the middle of okay, that's when global effects start. That pretty much this is awful. So before I get into this, make sure you guys subscribe, like, and share these videos. And I usually don't say that, but I'm saying this so you guys could follow along because this is stuff I've talked about. So if you've seen that video I made, you could understand why my tone is like this, why I'm flipping out right now. This is just insane because I have a bunch of puts. I'm gonna have like 30 or 40 contracts in the money tomorrow. I'm already in the money on like 10 or 15 of them, but this is bad. And now the next thing to talk about is I'm going to talk about Facebook. I talked about it on stream. What Apple is going to do from here, it's not really the play is going to be tomorrow. There's going to be some movements, but the fact that this just lost 7%. I think the market cap is I don't know the billions of dollars. I think it's somewhere like $60 billion. So this is insane. This is just like Facebook when we saw Facebook drop, but Apple dropping here, considering where it was, it's back at that low level. So to see how people are going to respond from here, but this could get really ugly. But again, what I'm tripping out is the fact that the Apple is one of the leading companies. Especially what they make in China, but for them to come out and cut guidance, this is the worst indicator. This is anything for you guys. That's why I'm freaking out. This is actionable news where I'm saying now from tomorrow till the next, honestly, 2 months, watch how Apple is going to play. It's going to move like a Facebook. It is going to be interesting, but this is insane. It's that I thought Apple would be the company that they were going to come in and prop up the market and say some, try to jawbone it. But for them to do this is crazy. Again, this is just saying that the slowdown is there, people, and here's why the valuation is getting cut. Because think about it, people were pricing in from this drop from the rate hikes, the global, people were already pricing in emerging market slowdown, and now they just confirmed it about 3 or 4 weeks before earnings, which is again insane. So let's go and read the filing. So here's the 8K and why I checked, because they have to report this. I thought it was just like Tim Cook talking, but no, they reported this. This isn't because when I read that they cut guidance, it's not their earnings. So the fact that this is what I'm saying with these types of news, when a company before their earnings changes their estimates after, if you're not talking estimates on earnings and you change them, that is wild. It's a very, very bad sign. But here it is. It's a letter from Tim Cook to Apple investors. You say we're revising our guide. See, they're not cutting, they're revising it, right? Which ended here for the fiscal 2019 first quarter, which ended. It's already ended. So think about it. Oh man, they got the number. They said it's bad. Oh man, but revenue of approximately 84 billion. Gross margin of approximately 38%, operating expense of 8.7. So now to get this, I need to do this. I'm just doing this as I'm getting the news, but I'm going to go back and see the last one. I'm sure you guys, please comment below. You guys can make it easier for everybody. Put the expectations, or you could go look at it and it'll give you good experience to go figure out how to get up to date with these. But We expect the number of shares used in EPS to be approximately 4.7. I wonder that'd be an interesting thing to see if they change also. But based on these three estimates, our revenue will be lower than our original guidance for the fourth quarter. For the quarter, with other items remaining broadly in line with our guidance. While it may be a number of weeks before we complete and report our final results, we wanted to give some preliminary info to you now, which Apple is since Tim Cook has been in charge. He's done it more frequently, but to give any updates on earnings is very, very weird. He did that in 2015 to save the market. That's what I was saying. Our final results may differ. So this is bad because now I'm just like, dang. So maybe now they're admitting, they're throwing it in. Our final results may differ somewhat from these preliminary estimates. When we discussed our Q1 guidance with you about 60 days ago, we knew the first quarter would be impacted by both macroeconomic and Apple-specific factors. Based on our estimates of how these would play out, we predicted that we would report slight revenue growth year over year for the quarter. As you recall, we discussed 4 factors. First, we knew the different timing of our iPhone launches would affect our year-over-year compares. Our top model XS and iPhone XS Max shipped in Q4 18. Placing the channel fill in early sales in that quarter, whereas the last year iPhone X shipped in Q1 18, placing the channel fill in early sales in the December quarter. We knew this would create a difficult compare for Q1 19 and played out broadly in line with our expectations. So they're kind of trying to talk it down. This pretty much they're saying the iPhone X and the weird launches that it was going to be a quarter, year over year. That's the thing, but let's continue to read. And again, this is my first time reading through it with you guys, so that's why I'm stopping and do this. I thought it'd be good for you. I'll just talk my thoughts out. But second, we knew the strong U.S. dollar would create foreign exchange headwinds and forecasted this would reduce our revenue growth about 200 basis points, so 2% on as compared to the previous year. This also played out broadly in line with our expectations. So all of this was in that again, but all of this is in line. The only thing is saying revenue was outside. So I want to see what they say. Third, we knew we had an unprecedented number of new products to ramp during the quarter and predicted that supply constraints would gate our sales of certain products during Q1. Again, this also played out broadly in line with our expectations. So I guess they're trying to say we warned you guys and we warned ourselves, but we were still right. But the sales are down. I think it's just more macro. Let's see. Sales of Apple Watch Series 4 and iPhone were constrained much of all the quarter. They always sucked. Come on, man. Fourth, we expected economic weakness in some emerging markets. That turned out significantly greater. So there you go. There's your line. Apple's admitting China is crashing, China is slowing down. Because that's what I'm saying. Everything else, that's how you interpret this. They're saying, well, we got this. They're saying this was going to be a problem, this was going to be a problem, this was going to be a problem, but it fell in line with our expectations. That means the market priced for it. What they didn't price and expect for was economic weakness in some emerging markets. So the next Apple filing is going to be great to see this. So that could throw my whole earnings idea out the window, because I was saying that it could have been, I was thinking that earnings could be good for a lot of companies because people would have underestimated it. But now in this case, now companies are saying, yeah, we overestimated it. So sorry. These last 2 points have led us to reduce our revenue growth. I'd like to go a bit deeper on both. So he's highlighting it's the iPhone and emerging markets. So while we anticipated some challenges in key emerging markets, we did not foresee the magnitude of the economic deceleration, particularly in Greater China. In fact, most of our revenue shortfall to our guidance and over 100% of our year-over-year worldwide revenue decline occurred in Greater China across iPhone. So China trade war boycott. So maybe this is Apple's message to Trump that we need something fixed. China's economy began to slow in the second half of 18. The government reported GDP growth during the September quarter was the second lowest in the last 25 years. We believe the economic environment in China has been further impacted by rising trade tensions with the United States. As the climate of mounting uncertainty weighed on financial markets, the effects appear to reach consumers as well, with traffic to our retail stores and our channel partners in China declining as the quarter progressed. As market data has shown in the contraction in Greater China, China's smartphone market has been particularly sharp. So again, keywords like those are keywords. They're admitting it's declined. At least they're not saying it's collapsed or anything. But yeah, despite these challenges, we believe that our business in China has a bright future. Awesome. The iOS developer community in China is among the most innovative, creative, and vibrant in the world. Hard to believe. Our products enjoy a strong following among customers with very high level of engagement and satisfaction. Our results in China include a new record for services revenue, and our installed base of devices grew over the last year. We are proud to participate in the Chinese marketplace. Awesome. iPhone. Lower than anticipated iPhone revenue, primarily in Greater China, accounts for all of our revenue shortfall to our guidance and much more than our entire year-over-year revenue decline. In fact, categories outside of iPhone combined to grow almost 19% year-over-year. Wow, that's crazy. I wouldn't expect that. That's why I remember I was saying the iPhones, the iPads and stuff suck. Interesting. While Greater China and other emerging markets accounted for the vast majority of the year-over-year iPhone revenue decline, in some developed markets, iPhone upgrades also were not as strong as we thought they would be. So that they're throwing that in there. That one's a good one. We can't miss that, because they're saying a lot of it's coming from emerging markets. The other items have done good, but the upgrades weren't as strong as they thought they'd be. So they thought I was going to buy my iPhone X and go to an iPhone XS. I have small hands, Tim Cook. You do too. You should know this. So no, we did not do that. But that's huge. That's, saying both domestic demand as well as overseas. But we just haven't seen this domestic demand get reflected in lower revenue and stuff for them. While macroeconomic challenges in some markets were a key contributor to this trend, we believe that there are other factors broadly impacting our iPhone performance, including customers adapting to a world with few carrier subsidies, US dollar strength related price increases, and some customers taking advantage of significantly reduced pricing for iPhone battery replacements. So they're saying now that we've made batteries cheaper, people aren't buying phones. Okay, good job. Dollar strength and subsidies. So no more, they're saying how contracts work. This is big, actually. This is kind of crazy, because if they're saying this is a problem, I remember iPhones got huge. Remember when you would sign up and get a free phone, you sign a 2-year contract? They don't do that anymore. They just put you on a payment plan, but you still pay for the phone. That's what they're saying is changing. And then the dollar. So this is big. This is big for them. So many positive results in December quarter. Let's see. Yeah, we'll finish this. Well, let's get to the positive. While it's disappointing to revise our guidance, which I agree with you, Tim, and that's where even Tim knows this. So you guys hopefully learn this as well too. Our performance in many areas showed remarkable strength in spite of these challenges. Our installed base of active devices hit a new all-time high, growing by more than 100 million units in 12 months. There are more Apple devices being used than ever before, and it's a testament to the ongoing loyalty, satisfaction, and engagement of customers. So you guys see, this is like an earnings call. That's what it sounds like, because they're giving the bad, they're revising their estimates. So it's kind of like a pre-earnings. That's why I'm saying this is so huge, and you could see that reflected in the stock. It's still moving as we're talking. I have it up on my other screen, but it was up here when we started, dropped $1. It's gonna be like this, but how it's gonna affect futures, other markets, gonna be very, very interesting. But let's see. Also, I mentioned earlier, revenue outside of our iPhone business grew by almost 19% year over year, including revenue, not sales. So that's just how much so they just raised the price, including all-time record revenues for services, wearables, and Mac. Our non-iPhone businesses have less exposure to emerging markets, and the vast majority of service revenues related to the size of our installed user base, not current period sales. So that's good, because people want to see Apple services. That is the next, I think, bread and butter for the company. But the thing is, it's just nowhere near the size of their device market. So that's good, but investors didn't even really care too much last time. Services generate over 10 billion in revenue during the quarter, and again, that's a lot. But remember, they're making 46 billion from somewhere else, which is what we want. Growing to a new quarterly record in every geographic segment, and we're on track to achieve our goal by doubling the size of this business from 2016 to 2020. So again, and I think that is, as Apple transitions to a service person, that will be like Adobe going from software to, monthly stuff. And I think that will help Apple. And that's the thing, Apple can have these short-term changes just like Adobe did. So wearables grew by almost 50% year over year. That's crazy. As Apple Watch and AirPods AirPods counts in that, were wildly popular among holiday shoppers. Launches of MacBook Air and MacBook Mini powered by Mac to year-over-year revenue growth, and the launch of the new iPad Pro drove iPad to year-over-year double-digit revenue growth. So again, they keep listing revenue growth. As you'll see from the filing, I don't care about revenue growth for them, because as we saw here, they could raise the prices, but the minute the demand stops, it doesn't matter. But I want to know actual sales, like, what is the demand like, and are people buying it? We also expect to set all-time revenue records in several developed countries, including US, Canada, Germany, Italy, Spain, the Netherlands, and Korea. And while we saw challenges in some emerging markets, other set records include Mexico, Poland, Malaysia, and Vietnam. So these are interesting, because they said they also set records here, but they had challenges. We should watch these countries just with other businesses, because And remember, Apple's a leader, and when they start to admit things, that's crazy. Finally, we expect to report all new all-time record. So, man, that's what's crazy is because they're giving out such crazy great guidance, and it's so close, and the stock is still down. This is they're really giving investors opportunity to price in. Looking ahead, our profitability and cash flow generation are strong, and we expect to exit the quarter with approximately 130 billion in net cash. As we stated before, we plan to become net cash neutral over time. As we exit a challenging quarter, we are confident as ever. So he admits it's a challenging quarter. Let's do it. We are confident. I don't think they've ever admitted that. Maybe we'll have to, someone could look that up. We're as confident as ever in the fundamental strength of our business. We manage Apple for the long term, and Apple has always used periods of adversity to re-examine our approach to take advantage of our culture of flexibility, adaptability, and creativity, and to emerge better as a result. Most importantly, we are confident and excited about our pipeline of future products and services. Apple innovates like no other company on earth, and we're not taking our foot off the gas. We can't change macroeconomic conditions, but we are undertaking and accelerating other initiatives to improve our results. One such initiative is making it simple to trade in a phone in our stores, finance the purchase over time, and get help transferring data from the current to new phone. Why is that? How is that going to make anything better with macroeconomic data? Did that make any sense? I'm going to read that again. We can't change macro, but we're undertaking accelerating. Oh, so yeah, that's the man. They're saying we can't change macro, but you should see what we're doing here, huh? You should take a look at our. Wow, I'm baffled. This is not only great for the environment, it's great for the customer, and the existing phone acts as a subsidy for their new phone, and is great for developers as it can help grow our installed base. This is one of a number of steps we're taking to respond. We can make these adjustments because Apple's strength is in our resilience and the talent and creativity of our team, and the deeply held passion for the work we do every day. Expectations are high because because they should be. We're committed to exceeding these expectations every day. That has always been the Apple way, and it will always be. Apple way, yeah. So as you see here, I just read you I feel like I'm Tim Cook because as I'm finishing the letter, the stock is now beginning to hit new lows. So this is going to be a crazy play. This development, and the key here is just like go watch the video I made on oil, because that in the dislocation we were talking, I did not expect it to come this fast, and to see, and we're going to see what the market is going to do and how it's going to take us from here. But at the end of the day, you guys should be seeing, okay, how is this going to play out over the next few days? And then even watching Apple and other stocks, this is going to have, it's definitely going to have an effect and the contagion. That's what I was saying with the oil video, is that it had, oil in China is worried about the spread. Now China said some stuff, and even back in August when China threatened Apple with other stuff, a lot of this is all coming back to light now. So now this is kind of the first, I said the Huawei was the first shot in the trade war, the real trade war, when we arrested that lady. But now this is becoming this is a milestone. I don't think you guys are really, that's what I'm telling you. When I even documented this the first time, this is looking like 2001, and this is when the crash happened. Microsoft did the same thing. I think Apple did the same thing before they crashed in the 2000s. This is a very unprecedented event, and it's crazy. So what is going to happen and how other companies report from here, and if it spreads, if there is contagion on the market of these estimates, they just announced that it's bad. It's going to be interesting. But like I said, even with how Facebook responded, be prepared to, Apple could move its own way. Facebook hasn't dropped yet. I don't know how much it brought. This is going to bring the SPY down somewhat, you see, but obviously not as low. But how other countries and other people respond, especially in the morning, that is going to be very interesting. So hopefully you guys like this. Let me know your thoughts. This is absolutely insane. Drop a comment below. Give me some of that info. Let's hear this, man. We're gonna have an awesome stream tomorrow, so be on there 6 a.m. We're gonna make a lot of money on this. I'm already up. I'm in the money. I said, I think I'm in the money on 15 of them now. So praise God. But let's see what happens. There's gonna be opportunities on both sides. So let's get it. Peace.